Yeah, we're taking a look at Costco's EPS. Coming in with an EPS beat of 4 cents. Revenue coming in line. COST Costco.
3% of my screen. 6% total, 5.7%. That COST Costco. Costco shares right now trading
what else?
actually trading now just up about 9 cents. 9.43. Now trading lower. Reversing here. Charlie Oscar Sandy Tango.
What's up, Papu? Let me minimize this.
Costco share is now at 940.89.
And what else do I need here? I gotta X out a few things. Oh, let me send this to stock quick. Hold on. How's everybody doing? Mario, my screen and voice is okay? I'll keep the mic close to me here now anyhow. Uh-oh, I gotta change my avatar. People are copying the account again. All right, let me mute this. I didn't really get a chance to prepare, but we'll do it on the fly. We'll go through market updates. Just a couple things I wanted to look over with you guys. Give everybody a couple minutes to get in here. I came on a little late. Thank you. Looks like Costco a little bit choppy here, kind of flat. They were looking for something in particular out of Costco. Is this the number? Right, there was something last quarter that caught their eye. Company sales include this. I don't know. Definitely could bounce though here. Oof, a lot of stuff going on this chart. Let me get a few things off of here. Okay. Thanks, Truck. If you're nice, maybe you can hit me up for a loan. Since I have quite a few gazillion to throw around. Let me put on the air a little bit, and it's hot in here now. This weather in New York, boy, what a tragedy. One day it's hot, one day it's cool, one day it's raining. It's miserable. Miserable. Low interest, yeah. All right. Throw this down. All right, so obviously we got a little bit of a rinse here, if you want to call it a rinse. Yeah, I guess we could call it a rinse over the past 2 days. And some of the hot names cooled off a little bit, but, you know, there are a few of them that really haven't come in much at all. And you like to see some of those cases get shaken out a bit before this is all said and done. But a couple things to look at, kind of big picture wise, to give us an idea of what's going on. Hold on, let me post this chart I wanted to show you guys too. Hold on. Where is it? Here. Now this is, I don't know why it's different for equities and Bitcoin. Doesn't make sense. Okay. All right, so a few things here, right? First and foremost, you start to see some selling, and you just want to kind of keep tabs on whether there's something larger involved, right? Something bigger at play. Could be significant all sides positioning, or could be a catalyst at a credit markets, whatever the case may be. And so far, from the stuff we pay attention to, it looks more of kind of a rotation than anything else. Granted, the selling hasn't been much. I mean, let's be honest. It feels a little bit more than what it actually is, because these down days have been rare, right? Especially multiple down days. But we were at a point, if you recall, again, just even on more tactical side of things, you had an upside niner, which in simple English for anybody who's new is a potential sign of exhaustion. A lot of times, especially at the index level, even the most bullish of markets, you'll get some digestion or you get a quick rinse. If you look some of the prior instances, and if you can make it out on this chart, yeah, you can see it, right? So let's take the couple we have to deal with, the few that we have to deal with along the way here. This was kind of one early in the rally, right? You got a little bit of sideways action. This was another one here, mostly just sideways action. Here's another one here after that rip, mostly just sideways action. And what happens is, as the rally gets longer in the tooth, you're either going to get a lot of times a little lengthier digestion in the sideways action, or it can resolve via quick rinse, sort of kind of like how this went, right? So here's that upside niner again here, and you had a quick 2-day rinse, kind of resolved. Oh, let me get this off. And I think that leads us to where we are now, right? So this most recent one, the market it tried to pull away from it, which is not the easiest thing in the world. It can happen in some strong momentum environments, but usually if you do, you kind of pay the price later on, right? It leads to a more violent resolution when it shows up. So the good news is we really didn't get a whole lot of extension, right? You can see the red bars here. We kind of wiped that out rather quickly. Okay, so the best way to put it is kind of what you would expect off some of the more tactical signals we were seeing has manifested here. Okay, and like I said, to get into the details of it, I would like to see a little more of a shakeout in some of the hotter stuff out there. Okay, right? You want to shake out some of those chasers, which we really didn't get. And, what does that mean? It could mean that there's further digestion to go, or maybe the momentum's just so strong in these things that there are really no sellers. The problem I have is being that they're up so much, like literally minimum 100%, a lot of these names in a week. It's not a good thing in my eyes for to avoid a shakeout. Okay, because it's almost like, if you think about it like in bubble terms, right? It's the bubble continues to inflate, and when it deflates, it usually ends up being ugly via violent price action on the way down, or even lengthier consolidation when the momentum runs out. And that's where the heat is in this market, right? We talked about it. You don't have market-wide, you don't have a lot of heat. And what's the reason why it's really difficult to get much momentum on the downside without a catalyst involved is that after you get a couple of days of weakness, money's likely going to rotate into some of these areas that didn't participate in all this bullish price action of recent. And we're starting to already see that, right? Some commodity related names have been seeing some flow. Some names on the cyclical side. Now, it hasn't been super aggressive, the rotation, but again, it just started, right? We just sold off for a couple of days here. So that's kind of what I'm looking at as we progress here. For me, guys, and I'm being dead honest with you, okay? Like, I'm not going to sit here and pretend like it's my game or I do it well or I even get a good read on things, right? If I can't get a good read on something, I'm upfront and honest, especially with myself, rather than pretend. And when you have names, like these guys, let me get some of this. Holy minute. When you got names like this that are up so much, people are so eager and quick to buy when you're a bull that little weakness that shows up. We got a pullback in IONQ. I mean, the stock's up 150%. You got 1 day of downside, right? And what happens, you got the bears who want to short it, right? Thinking that it's going to collapse, and they usually don't, all in one shot. And then you got the bulls who want to buy the early weakness. So you get that kind of tug of war action, which makes it really difficult to get a read on, right? So I try all this stuff here is what I'm getting at for me. And I know you guys like to play these things, especially if you're playing them on a more tactical basis, because there's a lot of movement involved. There's a lot of volume involved. But you guys know how my feel on these things. After they hatch in a big way like this, I kind of don't pay much attention to them. Sometimes I look at them bigger picture-wise in the market because I would like to see a healthier shakeout because that's where the froth is. But as far as looking for opportunities on the long side, this is the last place I'm looking. Okay. Again, that's not to say they can't, dip for a couple of days and go higher. For me, it doesn't matter. I don't care, because this is the difficult money now for me. This is the tough money out there to try to make for the reasons I just mentioned, because you get kind of that two-sided action now where bears think the story's over and bulls see a little bit of weakness and look at it as an opportunity. So you kind of get that volatility and that tougher trade. On top of that, and more important of it all, the flow in these things, it's cooked now. Like you're likely going to see call flow into consolidation initially and into the pullbacks in these things initially. The problem with any of the flow is that all the buying that occurred prior, a lot of that flow is just adjusting, right? If you are involved and you've rolled in the name and now the name comes in, a lot of times these players roll down their rolls for a higher delta. Maybe their rolls are too far out of the money, right? And they don't want to be too far out of the money. So they roll down strikes if they want to keep decent exposure in these names. Bottom line is the flow gets messy, right? The flow is a messy read. So a lot of these names are just too difficult for me to get a read on flow sentiment-wise, okay? So I wanted to put that out there because I know, especially, on the retail end, that's where all the attention is, right? Especially now, for good reason. That's where all the momentum's been. But it really doesn't tell me a whole lot about, any clues to what I want to see in regards to the behavior in the market or anything, or name specific if there are any opportunities there, right? So what I'm looking more towards now is I want to see, like, again, if these small cap names, these under the hood speculative names, if they're going to kind of remain in favor, is there any risk appetite in new opportunities there, right? Because that's kind of that would be the healthiest sign, is that you see a healthy risk appetite in fresh names. All right. Again, what I mean by fresh names, you guys know the list of names that have been annihilated over the past 2 months, specifically the past few weeks, right? From nuclear names to quantum names, all these niche plays. If the momentum is going to remain in a lot of these underbelly, under the hood type names, they're likely going to find other pockets that aren't as overheated and overextended. Okay. Again, I'm just saying a scenario to where kind of these smaller speculative names, the momentum carries on. Very easily we could see momentum into even different market caps, right? Some of the larger cap names. Today you saw a little bit of that, not a whole lot, but you saw some of quote unquote the quality names outperform. Here's I guess half gut, half kind of signals are leaving me impression-wise. I feel because of this, and you guys have heard me talk about this in the past. How do I get the symbol on TradingView? Yeah. Okay. Because of these correlation levels, pretty low. This is 1 year. If you go even to like a couple of months, you'll see it stand out even more. Without a spike in correlation, which usually brings a VIX pop, a healthy VIX pop with it for however long it may be, a couple of days a week, where the dispersion, as we call it, is likely to continue. And what that means in simple English is you're going to see it's going to be on a name-by-name basis, right? So kind of if you look at the price action today, you look at the indexes, they were down. There were names that were up and had some decent momentum, right? We saw like repeat activity in Intel and IBM, and those stocks, have seen some nice buying and they're on fire. You would have never known the market was down today. Right? And on the flip side, you're going to see that in the opposite fashion, right? If the market is up, you very likely will see stocks that are down and not participating alongside the indexes. Okay? It's very random and sporadic. Now, the flow helps, especially if you have aggressive buying in new names and newer stuff. That's where the sweeper activity can provide a huge edge in this type of tape. Because this gets labeled a stock picker's market, but it really doesn't do it justice because it's not as easy as it sounds, right? It's a stock picker's market because names can go either up or down regardless of what the indexes are doing for whatever reason. A lot of times, even within sectors, you'll see, let's say, for example, the semis, some name SMH may be down, but some of the semis may be up. Some of the other semis may be down, right? So you get a lot of randomness with it. So the sweeper activity can provide an edge and is very useful in this climate if we see aggressive buying continue in newer names, right? If the pace of the action just stays in the same names that have been seeing all the action, it really doesn't provide much of an edge at all. It makes things even more difficult to get a read on, okay? But that's kind of my impression right now without a decent pop in correlation. Okay, let me get the other one up. It's a little cleaner. Hold on. Is it the 3 month? Hold on. Which chart is it? I think this is it. Yeah. So as this lingers here, if you don't get a decent pop out of this, you don't need this because this will likely bring a correction in the market, right? But you need kind of an intermediate pop out of this, and then what that allows is the unwind of that. Okay, initially you'll get some healthy participation. So, for example, you get VIX pop, correlation pops, the indexes come down for a week, and then as that settles in, the unwind of that Okay, when the market starts to firm up, bottom and rally, and correlation starts to roll over again, that's where you got a decent tailwind and you got a higher probability of making money in a name if the market is higher, right? So, but without that correlation, Pop, we have this type of climate we have to deal with, right? Which makes it, again, a lot trickier. So, that being said, right, kind of, again, this is nothing new we've been talking about the last few weeks here, right? Big picture wise, and we'll look at some of the stuff to get you guys updated, those of you who aren't STEAMROOM members. Big picture wise, the signals are still okay. Okay, we don't really have any significant caution flags out there. On the positioning side of things, you still have underexposure out there from a lot of the professional side. Okay, there are a few hot pockets, kind of what we talked about over the weeks, systematic fund positioning and stuff like that. But there's nothing screaming raise cash, get out of the whole market, kind of like we saw earlier this year, right? It's a lot more secluded to certain pockets of the market where all the long exposure is, all the bullish sentiment is, and all the price action is, okay? So there's nothing there that concerns me, right? Just being honest with you. But at the same time, we need to be smart about things, right? If it's going to be a trickier environment, and I'm not just saying that now because we had a couple of down days, right? We were talking about this for the last 2 weeks as things were looking as bullish as they've ever had, right? But as the environment gets a little more difficult, we just want to be prudent about it, right? The number one priority right now, in my opinion, for all of us, okay, all of us, if you participate in this rally in a healthy way, okay, and you paid attention to the things we look at each and every week on this market, and you've been long and strong, okay, the number one priority should be holding on to the bulk of those profits, okay? And you see how I'm not saying hold on to all of them, because to hold on to all of those profits, you would need to go into an elevated cash position, okay? I don't think signal-wise, and there's anything showing we need to do that, okay? But at the same time, we don't want to get caught in something where we give back the majority of the money we made in a lot easier of a market with a lot less risk than we're seeing right now, okay? So that's kind of, I don't want to sound wishy-washy, but that's kind of where I've been at for the last couple of weeks, right? And that's kind of where I continue to be, right? What that means action-wise to me is the same thing I explained to you guys. I've been lightening up on a lot of the stuff that I've been involved in for a good portion of this market, right? So a lot of the stuff I've been long of and found success with, but I've been holding on to, I've lightened up on a lot of that stuff. I still have exposure in those things, but have lightened up from the size I had. But at the same time, if I see aggressive buying in some new names or new areas of the market, I'm willing to put some of that risk back on, right? Right now, I'm being a lot more selective, right? I'm being a lot more picky for the reasons I just mentioned. Nothing beyond that. Okay. And this is just something that I've had to, I don't want to beat the dead horse, but I explained to you guys, I've had to take this approach because my big problem throughout my career was giving back everything I made in the good times. Right? Trying to milk every penny out of a rally, only to, when I got caught, the first week or two of selling, all those profits evaporated because I got caught heavy-handed every time. So for me, that's something that I had to tackle and be aware of early and pay a lot of attention to. So I have to take that approach to where if the environment has changed, even though it may not be a bearish environment, may not be an environment that screams extreme caution. It's an environment where I still want to participate in, but I want to be smarter about things. Okay, so that's kind of my interpretation of the signals right now. But I still, without some unknown event here, I think dips continue to be bought. I feel there's a lot of pain trades on the upside, right? We've been talking about that small cap trade for a while. These small speculative names, anytime they go higher, it's a pain trade for most hedge funds, right? Who are short. This is the stuff they've been short of. And, at the same time, we got to try to avoid and not get too excited about the stuff that everybody's excited about, right? You got this AI and tech theme that's where all the money is. And if there's going to be a little bit of shakeout, that's where the shakeout's going to occur. It can't be a shakeout anywhere else because there's nothing to shake out. So we got to keep that in mind. But here's why, right? We'll go through them, just a few of the big things here so you can see. Sharpies, as a matter of fact, okay, again, where I would be concerned, Sharpies kind of tell us everything we need to know about positioning, in my opinion, in regards to the overall market, okay? Where I would be concerned was if Sharpies were aggressively adding on hedges like they were at the end of last year and early this year. All right, we talked about that here. Here you can see they actually bumped up a little bit of their long exposure because hedge funds who have been covering shorts added some short exposure back on recently. Okay? So this tells you here by itself that positioning is still not offsides in a bearish way. Okay? And the Russell 2000 is a big reason why, but also the S&P 500, where hedge funds are actually net short the S&P 500. Not to an extreme, but they are net short the S&P 500. Okay? So that's where Sharpies are at. Now, again, what's interesting, about this kind of trickier environment, while the Sharpies are, I should have it here. Hold on a second. Oh, yeah. While Sharpies are long equity index futures, they have also been adding VIX futures exposure, right? We talked about that. And the reason why is you got hedge funds who have been aggressively shorting volatility. Okay, so even though hedge funds aren't really too excited about equities outside of a few AI mega cap names, they've been shorting VIX futures, and you have lopsided positioning there. So this is kind of the issue here, where at the least we're likely going to see these intermediate VIX pops, where you get a market rallies kind of like we did, new highs for a couple of weeks, and then you might get kind of what we're seeing right now, a rinse, VIX pop, and then they unwind that. Ultimately, the problem is that can become a larger offside positioning, and we're going to have to pay the piper down the line, right? Okay, but you got Sharpies here who are not hedged and are actually long equity index futures, but at the same time are long VIX futures as well. Okay, what in a healthier environment, an easier environment to be bullish in, is what we saw kind of in April, right? In April, now again, market pulled back then, but you had Sharpies net long equities and short VIX futures, which is a rare thing for them, okay? Because they're hedgers and they hedge, okay? That's ultimately a really bullish signal when they're short VIX futures into a VIX pop, usually brings the end of that VIX run, right? That rally. Here we got a different wrinkle, right? Again, this is nothing new. This is stuff we've talked about, but just rehashing kind of the difficulties here that we're going to have to deal with, all right? Here's the Russell 2000. Where'd it go? Okay, so the Russell 2000, again, these are Sharpies in the Russell 2000. You can see aggressive ads here. As hedge funds covered some of their shorts, they unwound some of that long exposure. And then last week, they added some of that back on. Again, this doesn't have to come down in a straight line, right? We talked about that. A lot of times, you get a lot of chop in between. But yeah, I think this all bodes well for the market as a whole. I think here's the problem with a lot of you guys. Not you guys specifically, but just a lot of people in general that see this. They see this and they think, that means IONQ is never going down again, right? Or that means any of these hot niche theme groups are never going to see weakness again, right? These things are on a planet on their own, right? What we're seeing in positioning in the market, especially in the futures market, has nothing to do with what we're seeing momentum-wise in these names some of these names that have gone parabolic. Okay, so that's where I think a lot of people could get in trouble, because even though we're not seeing anything to worry about positioning-wise in big picture in the market, they think they can chase a name that's up 200% and get away with it. Right? And where in reality, the pain trade would be the opposite of that. All right. The pain trade would be into stuff that nobody wants to own. All right. The only things people want to own are AI related and sexy story related. All right. So just keep that in mind when you see some of this stuff. It is constructive, right? It's bullish, but not bullish for things that are acting in a completely different manner. All right. So that's where Sharpies stand. Was there anything else on the Sharpie end? Not really. So again, Sharpies market-wide, right, in relation to futures, they still lean bullish here. Okay, so for me to kind of pull the plug and not look for long opportunities and kind of stay in an elevated cash position, not look at dips as opportunities, would be if they start to aggressively hedge, and we're not seeing that. Okay, we're not seeing that at all. The other thing that I think is worth mentioning and keeping an eye on, let me post it here. Okay, and I will just look at kind of the big picture stuff now because I think it's important. Is this. Come on. What happened? I get a reset, maybe. Here we go. Liquidity. Okay. So this has remained bullish. There's a ton of liquidity out there, right? To state the obvious at this point. Now the Fed is acting more in a favorable way in relation to rates. That could only be a plus. So without an exogenous event or really the economy, the wheels falling off, which is tough to see right now, this is bullish. This, again, doesn't mean you can't have dips, but you want to look to those dips as opportunities, right? When you see things this heading in that direction. Again, you got another thing like the government shutdown coming up, right? That maybe this is the one time where nobody's worried that you get kind of 2011 flash crash type event or a government shutdown that lasts a few days. Certainly possible. My point is, though, that if that does occur, it's an opportunity. All right, that's an opportunity, and not the start of potentially a larger problem or even a lengthier correction at this point. You understand? So, You got liquidity still robust and doesn't really look like it's quitting anytime soon, but we'll keep an eye on it. And you got kind of the smart money who looks to hedge early because prices have gotten out of control. Not even hedged yet. Really difficult to make a bearish case on the market, in my opinion. Again, disclaimer, you can make a case in some of these crazy names that they need to cool off, they need to come in. I certainly understand that, and I agree with you. Doesn't mean they have to come in. But I'm talking about the market as a whole and whether we should be constructive or whether we should be cautious. And according to what we're looking at and what we have looked at, it's still telling us to be constructive and look for opportunities on pullbacks. But I think it's important. I keep talking about it because I think it's important. Especially on the retail end, on the trading side. Right? Initially, they only wanted to fool around with the big mega cap AI names, and that's all, right? That's all they would buy, and that's all they would trade, and there was nothing else. And then you kind of had this underbelly, small cap, micro cap thing come to life. And now that it's gotten a little out of control, kind of all the focus has gone there now, right? And you see, like the mega caps, just when everybody got bullish, and it's so funny because social media you see it time and time again. Like back when the Mag 7 and all that, you would say, oh, I only trade these 8 names. That's it. I'm going to master trading these 8 names. I'm not going to trade any other names. These are the names to trade, right? And they were the names: Microsoft, Netflix, the usuals, because that's where all the money was being made at the time. But these names have been dead now. Dead. Right? And the market has kind of been impressive of doing what it's doing without these names even involved. I mean, Netflix, since the highs in July, has been completely dead for a good 4 months now. 3-4 months, right? Microsoft kind of had all that excitement off the quarter. Everybody thinking, oh, here we go, another parabolic run in Microsoft, or coming off an already parabolic run, and dead money. Right? Meta, which has been one of the better names out there, stronger names out of the bunch, really hasn't done much. Okay, so that money has been moving elsewhere, and again, that's where I think the opportunity continues to be. I think what we need to be careful about is just there are other things now that are taking the place of kind of these names. Right, the concentration's going into now a more speculative area, and that's all that's getting all the attention. And what we may see is money start to move elsewhere into other things. Okay. One thing in particular, and I'm not a big fan of these names. You guys know that, but the rotation has been going there, whether I'm a big fan of it or not, are these China stocks. Right? And they continue to buy pullbacks and dips in these names. The flow's been spectacular in a lot of these names on these China plays. And there continues to be decent opportunity in these things, especially for those of you who trade options. Equities, you probably want to be a little more careful there because, God forbid, you get caught. But for those of you who trade options, calls, there's certainly been a ton of opportunity there. You guys know Baba. I'm sure everybody, that's the first name they look at. It's up a decent amount from, this recent breakout. Looks stretched in a sense. There may be some digestion, but, you scroll back in Baba, and, this thing's been out of favor for a long time. I mean, there weren't that many, if any, bulls left in a lot of these China plays. So again, I just think these are areas that if they come down with the market, if they pull back, we probably want to continue to look for opportunities here. All right. Just want to be a little more careful on the casing side of things. But some of the underbelly names that kind of were taking their time in a sense. There's VNet. All right. You had some frustrating digestion here after a rally, but that kind of got loose here and looking good. This is another name that catches some decent action, GDS. And then some of the popular spec names, Futu, JD, which is always a tough trade, but they bombed JD. This is the laggard in the group. Okay, so these are all names, again, especially if you guys are call buyers, which most of you are. China's been one of the places where there's been a ton of opportunity, especially for trading purposes. Pony, I actually played this one, was one of the few. I don't really fool around. I used to trade a lot of these China names, but now, because especially I'm more on the equity side of things, I try to be a lot more careful because anything can happen, But this Pony looks good. I know a lot of you guys like that name. Again, they've had a nice move here. There could be some digestion, but I don't think big picture wise the move is over there. I really don't. I really don't. So that's an area that's been strong. What other areas we're seeing recently? A lot of these spots I don't enjoy playing. But more on the larger cap level. The ag names have gotten some attention recently. There's some rotation there. Me being more selective now, I don't want to participate in this stuff. I don't want to buy a $60 ag play. Give me a $5 ag stock coming out of consolidation. I'll consider, but I definitely, because again, I'm playing equity, guys. I'm predominantly playing equity, and I don't feel like buying a $60 ag name on a risk reward basis. That Chow caught a lot of action again recently. I had Yin, but I sold it all. I didn't keep any, like an idiot. I had some Yin. I bought some and then added. I was down on it initially, and then I got out of the whole thing. And I had Chow too, but I moved that into Yin. But these look good. What other groups? I'm trying to think of other groups here. My best advice for any STEAMROOM members is I would let the flow come, and that's kind of what I'm doing right now, my approach. Let the flow come to us. Don't go after the flow. In other words, the difference going after the flow. Is there any action in so-and-so? Let me see, right? So you're trying to dig up a reason to buy something. Again, when we were when we had tailwind at our back and we had a floor underneath us because of positioning and sentiment, we all get sloppy. I got sloppy. I'm the first one to admit it, right? You're looking for excuses to buy because you should. We talked about that. It may not be a good-looking flow in the name, but it sees some bull flow, and you look at it for a reason to buy the stock. Another thing a lot of us are doing, IPO, any sweep it would catch, we just buy the IPO. That's fine to get sloppy when you have those strong bull signals. Now, I think that's got to change a little bit. Okay, that's going to change a little bit. So, again, for me, my impression. So, instead of being sloppy, I'm letting the flow come to me now. In other words, the majority of stuff I'm buying is because there's enough aggressive buying in there that's almost forcing me to get involved. You understand? I'm letting the flow push me into things. And the reason why I want to do that at the same time is it gets me away from looking at the flow of the past, because I think that's a problem we could all fall into, is you see a name that's been littered with call buying for the past 3 straight months, and any flow you see in it, you think, you almost treat it like the flow we saw 3 months ago, and you can't do that. You can't do that. So by letting the flow come to you now, the flow's kind of going to guide you, right? To where, and if there's any momentum, new momentum out there, is there any rotation out there? Right? So each and every day, you just let the flow do the talking, and then you make the decision whether it's a place you want to play and be a part of or not, rather than relying on some of the older flow. Because again, if you rely on the older flow now, you can make a case for everything, right? Because it's all been lit up. All. Yeah, like we were looking. So example, Joby actually caught a decent round of action recently. Joby. Now, yeah, you rewind a month or two ago, off that action, I'd already be in Joby. I kid you not. It was a good-looking sweep. There was a little sweeper activity, same line around it. It would have been more than enough. More than enough. But now where I feel the environment's a little bit different, I want to dig into that flow and make sure it's new, clean betting. And, there was rolling in Joby. So I think the November buying, if I'm not mistaken here, I'll pull it up quickly just so you guys get an idea. Here. So Joby, you had this action come in November 19th. Okay? Again, nice size. And there was some action around it. There was some other buying around it. Here they added 92 grand. Okay. But, and you can see, I mentioned this in the commentary the other day. When you pull up the lines there, you see decent volume on the Novembers, but there are other lines with volume on them, right? Because again, Joby caught a lot of action. So it's very possible it could be rolling. And when you look at OI changes the next day, it showed that, right? So look, some closing activity here, October 20s, Jan 15s, October 15s, right? So it's just money moving around in a sense. Now, for that reason, I didn't play Joby. That doesn't mean Joby can't go higher. I just, at the point I'm at right now, I want it to be clean cut buying. I don't want to get caught chasing rolls, all right? Because that's where I could get in trouble. Because guys, the rolling is always going to be there to the last day, especially in the hot names. Okay, it's not like you're going to stop seeing call flow in any of these hot names when the market rolls over, because they roll all the way until the momentum stops, and then actually they still roll after the stock comes down, right? Because now they're rolling down strikes if they like the name. So you can't look at the flow in names that have gone parabolic to determine whether the momentum's ever going to stop in the name. Okay, it's impossible. And the point I'm making is, if you chase that roll action, you can see how easy it is to get caught with a basket of names in a correction and get dented. Again, that's what would normally happen to me. That's what normally would happen to me. Every time. I kill it off the initial activity. When all these names started to see buying, I would pick up all the money, but then still playing in these names and getting caught in a correction. Again, it didn't even have to be a market correction, just a correction in those names. I would give it all back. So I don't, I try to avoid doing that at all costs, to my detriment. I do it to such an extreme now that even early in the rolling cycle, I don't participate. You know, where there's still actually money to be made. But I know that's my big problem. That's my big problem in giving profits back. Okay, so that's why I try to avoid it. So again, for me, for Joby now, for me to get involved in a Joby, it's got to be clean cut buying, right? So in other words, that November action that saw some closing activity around it, they would need to hammer it, right? They would have to show up today again and hit those Novembers, and then maybe tomorrow again, and they hit those Novembers, and then I say, okay, I'm buying Joby. You understand? So that's kind of what I'm looking at personally, and to kind of be a little more conservative, yet still participate. All right, still participate. And you know, I can't even be that disciplined. I would love to. You would miss out on winners in this type of market, but your hit ratio would be ridiculous if you played only the names they really bombed. Like if you look at the names they really tattooed and the results, I mean, even garbage names like a Riot, right, which they annihilated. I had no interest in buying a Riot. That's the last Bitcoin miner I wanted to ever buy, would be a Riot. But they hammered it, right? Neo, they hammered it. Right? So GoPro, they hammered it. So like your success rate goes up significantly in names they really light up. And if they're not lighting things up, that probably is a signal that the risk appetite's waning, right? So that's kind of how I'm looking at things here. That's kind of how I'm looking at things here. Mara, and Mara's been tough. There's been bull flow in Mara, but I wouldn't put it up there with the others. I'll give you a list of the Bitcoin mining space to me was my favorite group for the last 2 years, flow-wise. We've talked about it. Like the money that could have been made in these Bitcoin, which they're AI miners now, I lose sleep at night. And honestly, the bulk of my profits are in this space. And I still lose sleep at night because the opportunity, the setup there was just insane. You know, insane. But Mara's had some flow, but not like Riot. I don't know if you remember seeing the flow in Riot, Andrew. It stuck out like a sore thumb. You know, it stuck out like a sore thumb. So again, like now, right? So here's the problem, right? We're looking now. What are we going to do? We're going to look at. Do we want to look at laggards in a place where the names already went bonkers, and now we're picking the worst of the flow to try to get involved? Again, personally, Andrew, that's something you don't want to do. You understand? Again, you're forcing it, in my opinion. You're forcing it because all the Bitcoin miners that got lit up sweeper-wise exploded. Mara is still hanging out, and even though they're not lighting it up, I saw some bull flow in the past. Let me buy Mara, right? You're forcing a trade out of it, in my opinion. So I would look to newer names and try to see what develops there. Yeah, bull, like for example, so let me give you a couple of newer names out there that they caught action in recently. This is another thing too, and I mentioned this with STEAMROOM members. Just again, it's an important reminder, okay? A lot of the newer buying we're seeing, okay, the fresher buying we're seeing is in strikes with a decent amount of time. Okay? What that means necessarily doesn't always mean the same thing. But you got to understand, if they're buying something in 2020, if they're buying strikes in 2026, it's a luxury if it happens over the next couple of months, but shouldn't be expected all the time. You understand? When you got momentum like we had in this market, even when they're buying 6 months out, if they're hammering, it's going to go now because the momentum's so strong. But again, as an environment changes, okay, you can't approach everything the same way. So what I'm getting at is if they're buying Jan, February, March 2026, and you're concerned about what the stock may be doing over the next couple of weeks, it means nothing, right? They're buying. Otherwise, they would have bought front month if they were concerned about what the stock is going to do over the next couple of weeks. So just keep that in mind if you're interested in playing these things that are catching good-looking flow, but with time. Okay? Because a lot of times, like if let's say March 2026 calls, if you're looking for a move short term, you shouldn't be playing those. That's not the pile of flow you should be picking from. Make sense? All right. So that being said, a lot of the more recent names, the more aggressive action has been with a good amount of time. So here are a few of them. You got VFF, caught a 2-3 good-looking sweeps. December's. Okay, so those are some of the more closer ones. I bought some of this VFF. Okay, the other one, AUR, they bombed this thing March. Okay, so March, obviously, of next year. But they lit up March calls. I think they bought like 20,000 of them. Okay. What was another name recently here that they lit up? A lot of them actually, a few of them moved recently. I'm trying to think newish that maybe didn't move. Bull is more, I would say, spec action that they've been lighting up, but it has seen some decent action here. BULL. Looks like they're trying to catch a squeeze here. BULL. So again, this is where I would, whoever was asking that question, this is what I would be looking towards in a sense, right? Because again, whether this is a winner or not is irrelevant to me in the future. I'm just talking about setup wise. You see the difference here, right? Stock really hasn't done much, has just been sitting around, especially here recently. And what we've seen is a nice uptick in the aggressive buying, right? So it's not even the quality buying per se, but it's like they're gearing up for a squeeze, okay? The good thing about this setup is it's not old flow. It's not a name that has already exploded, right? So you kind of know your outcome here, right? Here is where they're hitting it, right here, not cheaper, right here. And you should see a move over the short term in this bull. If you don't, it's wrong. It's a loser. Whether it's break even, down a little, up a little is irrelevant. And you move on. You understand? Where a name like this, for example, that was down today, this move is immaterial. You understand? Like this move means nothing for them who bombed March calls, right? If they're right on this bet, by March, you won't even be able to make out this down day if they happen to be right, right? So it's a different type of setup there. But this bull, if you're looking for more on a tactical basis, is something I would keep an eye on. Let me see. Do I have a chart where you could? I mean, if you look here, let me see if I could pull it up here. But I might have even a nice chart for you guys. Hold on. Why is? Oh, Jesus! Because you know why the word bull and everything comes up. Jesus. Here's the action in bull today. But let me show you guys something. Let's see if I can point it out here. Hold on. This is intraday. Let me see daily. Where's historical volume? Nah, you can't really make it out here. Oh. I was hoping you could make it out a little bit on here, but you can't. Hold on. A lot of times when they're aggressive, you can make it out. I'll show you the charts anyway. So here's the action, right? So look, 10-3. Now there's some other further out lines mixed in, but again, the more aggressive action was kind of this stuff here, the shorter term stuff. Here's some of the action here. When did this come? At 3:30, right? Jan calls. That was a nice looking sweep. Jesus. Where's the 10-3 action? I can't even pull it up because of this. Yeah. This was yesterday? Oh, this morning. Let me see. I'm trying to find yesterday too. Nope. Nope. Yeah, I can't pull it up on here. Anyway, oh, here are the charts. I posted the charts. So this is kind of what you can't really make it out. Here was today. But you can see, right? The green bars are the call buying. And you see kind of throughout the day, right? A little quiet during lunchtime. And then continue. You see a pick up here late in the afternoon again, right? So a nice uptick in action. Yeah, I thought you could make it out better here, but you really can't. But this is kind of what I'm talking about here over the last few days. You've been seeing a build up, kind of gearing up for a squeeze in this BULL. All right, but a nice trade setup. OPAD, that's funny. I thought I bought that. For some reason, I didn't. This caught some action too, right? Is that why? I guess that's why you might be asking about it. OPAD. Let's see what the bet was. I don't even remember the bet. Hold on. I didn't buy it, by the way. I thought I did. I didn't buy it. Let me see. Jan calls. All right, let's see. But here, what's the date on these Jan calls? Hold on. So much action, man. August. More buying up 100%. Heavy activity, deep. See, so here's kind of the issue, right? What is this? August 25th. That was recently? Oh, here. They bought into that strength. So, yeah, I mean, there's been buying, stocks up from $1 to $4, $5, $6 over the last few days. You know what's funny, James? That doesn't seem like a lot now, but yeah, that's quite the move, right? Quadruple. But there's flow there, There's flow there. This would be one thing that I'm a little hesitant on, though. This kind of this big jump, because it may need to consolidate, kind of what like this did off the big jump. Here you had a little more go to it, but even you had a big gap here, tough. Again, 2 months ago, I would be all over it. I'd be in it already, probably. Now, I'm a little more hesitant. Again, you could even get caught in consolidation here, lengthy consolidation. So that's the tough part. Do you put value in buying into a rally? I don't. Well, listen, I hate chasing strength. I hate it. I don't feel comfortable ever doing it, Andrew. But I'm not going to lie to you, especially over the last few years, I have to do it at times. I have to do it. Otherwise, you miss it. I don't like buying green, to tell you the truth. I like buying things that are flat or down when they catch action. But for example, like even in this rally, if let's say a stock was up and caught aggressive buying and you didn't buy it, you were waiting for a down day, you'd still be waiting, right? So I'd rather buy on flat and down days, Ultimately, like you see this bull here, like you see this, especially if you take this out, like if this didn't exist, okay, because that's what I don't like about it. But let's say it was just this, like this is the daily price action. This is kind of the setup I like and I feel most comfortable with. Because what happens is you got kind of consolidation, chop, a lot of up and down, and you get that uptick in sweeper activity. That, to me, is what tilts the odds from 50-50, whether it goes up or down, to now, right, depending on the flow, maybe even 70-30, 80-20. And that's your edge of sweeper activity. You understand? That simple. That's your edge. So that's why I like, if I can have a dead heartbeat, I'll take a dead heartbeat and then give me aggressive sweeper activity into that dead heartbeat. Because it takes that 50-50 chance and bumps the odds of it moving in a particular direction by 20%. All you need to do is manage your money properly and you're going to make money, right? So that's kind of what I look for. Now, again, it's everything in this game is easier said than done because we're degenerates. We can't stay that disciplined. We can't stay that disciplined. I go, how many times I said at this point in my career now, you got to understand too, guys, I'm in this game a long time. Some of you guys are new. You're fresh blood. I'm in this game since 97. So, how many times I said to myself, all I want to do is all I'm going to do is just play the stuff they tattoo. That's it. I don't need to be bothered with everything else. Just play the stuff they tattoo. That's why I'll take my normal size positions and call it a day. But I need the action. I need the action. I can't sit around just waiting for stuff to tattoo. Like, listen, this rally, they tattooed a lot of stuff. Some other markets, you may not get things that get tattooed. Again, example, coming out of the 2022 bear market, it was basically Mag 7 that got tattooed and then nothing else. So you would have been sitting around twiddling your thumbs. And basically that's what I was doing for a lot of that. Where you get in trouble, especially if you're buying off the right activity, and that's what we're focusing on in the room, right? That's what we're looking at. What you get in trouble is buying the wrong activity in a name like this at the wrong time. You understand? That's where you get in trouble. Now, again, don't get me wrong. You can play it. You can size down, take it easy. But if you make a habit out of buying repeat activity in a name like this, whenever, that's where you're going to get cut up. Right? The money, Andrew, in my opinion, the big money is made catching this move off sweeper activity. The ability to catch this move. Now, you're never going to catch all of it with a size piece, but catch a piece of it and possibly leave a piece, right? Kind of like we've been trying to do. But that's where the money is. All right, look at this thing. Okay? This now is hard money. You got to earn your money in my opinion, now in Irene. You got to earn it here. Okay? Even if you buy it and you're up the next 3 days, there is so much risk that comes with it. You understand? Risk reward wise, you got nothing here, no matter what the stock does over the short term. Nothing. Where down here, when it's getting tattooed down here, right? On a risk reward basis, you can't beat it. That's where the money's at. Yeah, that's where the money's at. This is where the excitement is at, and this is where now all the eyeballs are at, right? Everybody knows Irene now. Back here, only people who were familiar with the company, right? Longer term players or people who were following the flow pretty much had an idea about this name. Nobody really knew much about it. Now, it's the talk of the town. Yeah, again, I'm not saying bull is Irene. You understand? I'm just saying, even on a trading point of view here, bull is at a much better spot risk reward wise. You understand? This is Webull, by the way. Yeah, this is Webull. Now, what's different from a bull in Irene? This simple, okay? And this doesn't apply in this market. When you got liquidity looking like this, what I'm about to show you don't mean jack shit. But when liquidity does this, that's when what I'm going to show you means everything, okay? Here's Irene. And this is what it made Irene special. You got profitability there. So you got a profitable name, right? That basically was trading in single digits, being lit up with call buying. That's what made Irene special. Now, again, I didn't think it was going to 50, but they tattooed it like it was. Yeah, I guess. Well, Irene, let me see. So, this turned profitable? No, it's been profitable. It's been profitable. Because I remember saying it as the buying was coming in. Now just more people know about it. But again, that really, when you got this type of market that we've had, that it's not as significant as normal markets where fundamentals matter. Irene going to 100, it may. It may. Is it going in a straight line to 100? I mean, it goes to straight line at 100. Like, see what I mean? Like, you see, like, these numbers get thrown around. And granted, the majority of these people probably are in stock from lower levels, so that they want others to buy it, right? If I own Irene at $11, it's very easy for me to tell you it's going to 100. Okay? Would I buy it at 47 here? Are you buying it, Mr. Gonzalez, at 47? Did you buy stock today at 47, holding to 100? Because that's a whole different story. Very easy to hold with a cost basis down here and claim it's going to wherever. That's kind of that's the problem here. So you got to understand things, especially on social media. When you see people pumping things, they own it cheaper. They're telling you that something's really bullish, and they're talking you into buying something that they own 200% cheaper. Okay? It very well may go to 100. Okay? Does it stay at 100? Does it correct before it goes to 100? These are all the more important questions. Moving again. So T, anything interesting, T, that caught your eye recently? New flow wise? It may well, Alejandro, I don't, who am I to say no? Like I remember Sahil was talking about that this name could get crazy. Look what this name did. But you gotta understand, right? Let's say you bought Oklo, kind of like Irene, right? Oklo, you guys, well, those of you in the steam room remember, okay? Oklo, here's where the sweeper activity was. Okay? So here's Oklo's first run. Okay, you gotta sit through this. Again, doesn't look like a whole lot, but sitting through that, especially if you're buying at the highs, forget it. Okay? Then this crazy run in the April correct, gave it all back. Then went dead and then set up another run. So now think of this, okay? Irene could be Oklo here. And you're going to tell people to buy the stock? Yeah. So again, if you owned Oklo at $8, $9, $10, where like people in the steam room, Sahil and some people had, that's fine, right? It's easy. Hold it, tuck it away, especially if you got a smaller piece. But to buy it up after a 200-300% move is a completely different story. Look at this thing. Yeah. So that was the point I was making here in Oklo, right? And that's kind of the point I'm making here with Irene. Can things go crazy and this thing just go crazy parabolic? Yeah, I don't think that would be a good thing, but it's possible. But it's also possible it corrects at some point. Maybe it goes to 60 before it does. But on a risk-reward basis, to me here, it doesn't make sense. It doesn't make sense. What else we got here? Archer. The Archer caught some action, but the better looking action recently, in my opinion, is Joby. And there was rolling in Joby, as I showed you guys. But even that being said, it's cleaner than Archer. Archer, there was some buying, but wasn't really too hot. Archer, when they want Archer, they tattoo Archer. Like, the flow will stand out. Like, I played Archer a couple times. Okay? I traded here, Archer. They came in here, short-term stuff, and I traded it. And here's where they tattooed Archer. And I played it there. Crazy. But again, right, this still looks good, right? This is just what you got to deal with after big runs. You know what I mean? Like, if you're bullish Archer longer term, right? If you believe in the name and you've left a piece behind with a great cost basis, I'm not going to talk you out of holding it by no means. I think that's a good move if you like the name. But here now, it gets more difficult. Like you want to see notable buying. You understand? You want to see it buying that stands out for it to have an edge off the flow is what I'm getting at. What else you guys got here? What are you saying, Sahil? VFF. Yeah, I bought some VFF too. VFF wasn't bomb. Let me show you what the flow was in VFF that caught my eye that I kind of like. Similar to GoPro, just not as much as GoPro. Similar to Tesla, the buying we saw in Tesla, but let me show you. And I know nothing about this VFF. Zero. This is it right here. Do you see this order? Like, that's not some speculative player just looking for a pop, a squeeze. Okay? Again, doesn't have to be right. Right? These guys could be wrong. They're wrong. Right? But this is a notable bet. You know, this is a notable bet in VFF. And then if I'm not mistaken, oh, here, November $2 calls. It got some more action. All right? This bet, again, not as good looking, but decent. And you got some insider buying in the wheat stock for whatever that's worth. And they just went profitable. Ooh. Where is it? Right? Oh, wrong quarter. Here. So we'll see. Again, December's. It's a newer name. You know, the only turnoff is the move has been already significant here, you know? On a short-term basis, obviously. On a longer-term basis, this thing's been better. But what else? IBM caught some nice action, talking some of the bigger names, so you guys don't think I just talk about small names. This has had a nice run. Real nice action in IBM. Intel has been bombed. A lot of news in Intel. Yeah, VNet, I mentioned earlier, all these China names look good. VNet finally got loose. I think you hold on to this VNet. Then it's been frustrating because it's been slow, but I think you try to hang on if you're long this VNet. Again, there's been decent sweeper activity, one. And the other thing that impresses me more is every thing I read on regarding China AI has Baba, Baidu, VNet. Every single one. Now, again, the reason why it's cheap, it's an ADR. You understand? But still, you know, I think it's going to get attention. And you talk about disparity between the rest of the world AI and China AI, you could really make the case for China AI being really cheap, right? That's why I still think there's upside in all these things, all of them. Again, if they consolidate and pull back, I think that's where you kind of look for opportunities if you're interested, as far as new buying is concerned. But I think these things remain in vogue in a sense, right? They continue to buy pullbacks. Yeah, I contemplate. I don't know how to play it. I don't know how to play it, you know, for it to be worth my while. I couldn't figure out how to play it. But I was thinking about it. So what I like about it, Andrew, is obviously it's come down a decent amount, right? Like a lot of recent bearish sentiment in it. And, you know, trying to bottom here. And they come in and there's some good looking longer term action in it. So if you like it, I think you should buy it. Just I don't know how, like, this has been some of the repeat buying, more shorter term kind of trading it, but let me show you the orders I'm talking about. It's so expensive. Like, I was looking at some of the calls they bought, and they're like, right now they're quintuple the prices of the stocks I buy. Here. Oh no, that's not it. But look, that's another good looking order, you know? Hold on. Oh, here. Okay. So this player sold June 2026 300 puts to buy the 450 calls. Okay. Look at this. And that, you know, the stock was even closer to 300. Sold the 300 puts to buy the 450 calls for a net debit of 210. Then before that, here, look at this. June 2026, 350 calls, pays $50. Here, $50. Oh, that's September. I went too far back. Yeah, that was September action. So that, yeah, June 2026, 350 calls. I guess you could go a bit further out of the money, but they're expensive. I think the best way to play it, Andrew, excuse me, find a line with time and risk your premium in this type of name. You know? So in other words, don't try to make a little bit of money on it. All right? There's easier money out there, hopefully it continues, to trade for quicker money, right? I think the allure here is to buy with time and try to catch the big move. Now, maybe the big move doesn't come, but that's what I think the reward is here. Because you know this, would it shock you? The calendar flips to 2026 and Duolingo's at $600 a new high, right? That wouldn't shock you. One quarter, one robust quarter, and you can get that. So there's certainly risk in it, but if the conservative way, don't go nuts. Risk your premium. If you lose your premium, it's like just a regular losing bet. Manage it that way, and look for the home run. Yeah, January should be good. At the least January, in my opinion. You know, and if you get a move earlier than that, Andrew, you can roll, right? You can roll. So definitely interesting. Definitely interesting. RCAT, yeah, there's been a lot of flow in this name, RCAT, you know? A lot of flow. Again, the only thing I would say about this is that there's been a lot of flow in RCAT. It started back here, you know, and it's continued. But to your point, there's a lot of flow. Like, in other words, they buy this RCAT almost every time it's down. They do a secondary and boom, sweepers come in and buy it right back up. So there's a lot of interest in this name, RCAT. A lot of interest. But it's just one of those repeat names. You know, here's another one, but this one has been a lot better performer. I think maybe not. Oh yeah. ONDS. All right. So this is another one they hammered. But look at the move, you know? Look at the move. Yeah, somebody mentioned this name. This is one I should have played. I didn't play. SKYT. This was a nice quick hit. Decent action in this thing, Skywater. So again, I wouldn't buy it at 15 here. The buying started at like 10 and change, if I'm not mistaken. But this was a nice one. The other one too, recently, this one, I day traded once, but I didn't hold it, and it just keeps going. Look, FLNC. This was another one, nice spot. You understand? So this is kind of what I would be more focused on is, you know, stuff at decent spots, newer action. And again, guys, if we're not seeing newer action, like if it dries up, that's good, because that's kind of, again, that's your seatbelt. That means you shouldn't be putting on a lot of risk, right? If we're seeing the repeat names are the only ones trading, that's a signal that risk appetite's waning. Okay, so it doesn't mean that the end of the world, the apocalypse is on its way, but it could mean rotation, could mean further digestion. You understand? So it keeps you out of trouble. Very rarely, it's usually a news event, some sort of catalyst like that, but very rarely are they aggressively, sweepers, I mean, aggressively buying new setups and the market falls apart. Very rare. You understand? Like I've seen instances where sweepers are getting aggressive in new names and there's some headline or news and takes the market down, and then they just buy that pullback aggressively as well. You know what I mean? But very rarely do you see like a correction build as sweepers remain aggressive. A telltale sign, usually sweepers dry up and you just see the same, right? You see Irene, you see the quantum name, you just see the same names catching all the pace of action. So that's another reason why I kind of look for the top action in newer spots here, because if there's newer action, I'm putting some risk back on because sweepers are telling me I still should be playing and money's to be made. But if there's not newer action that's impressing me enough to buy, I'm not putting that much risk back on. You understand? It kind of keeps me protected. Right? Because if I'm just playing as aggressive at all times, you can see how you can end up in trouble. What else? What else is kind of newish here? I'm trying to think of newish stuff. Stuff was talking about M2. I'm not the liquidity savant, Stavro. You probably know more about it than I do. Just any liquidity measure I look at that I have faith in is legit has all been up and to the right. Like I know there's QT going on supposedly and all this shit and blah blah blah, the repo market and that's above my pay grade. I don't get in the weeds on that stuff. Okay. I look to others who follow it a lot closer than I do, that I have conviction they know what they're doing, and whatever indicators they're providing is kind of what I'm going with. Every liquidity measure that I see, looks like this. I mean, you see it all over the place though. Look at like financial conditions. Have you looked at financial conditions? What? Oh, I spelled it wrong. Here, look at it. So tighter is higher, looser is south, down. All right. We're almost like in 2021 financial conditions wise, as far as being loose. That's how crazy it's been. That's why you see all this speculation, guys. What's really interesting to me, and again, I don't know enough about it. I talked to Smitty in the room about it. He was talking about some big liquidations and stuff like that. Bitcoin hasn't been acting right here. Again, it's not a travesty. It's more of just chop and consolidation. But it shouldn't be acting like this with liquidity looking the way it does. Now, there are probably other reasons that I don't know about. But, again, I don't play Bitcoin. It's, not something I try to handicap. But it's just it's not acting the way it usually acts. Bitcoin, the correlation with Bitcoin and this indicator used to be untouchable. Now it seems like equities are more tied to this than Bitcoin of recent. So I don't know what the hell's going on in stuff. Disney, yeah. I'm just honestly, it's a rotation name. I think we saw a little bit of flow today. Spot's not bad. You know, I'm not going to say I don't play the name because I played the name a few times when they bomb it, but that's the only time I'll play it is when they bomb it. Like bomb it. And we haven't seen bombing in Disney in a long time. Even Boeing caught a little bit of action here. You know, you can make the case for Boeing here for a bounce, no doubt. But it's tough. It's tough. Marvell caught some nice action. I bought some of this MVLL that I got some cushion on, and I'm holding the levered ETF for Marvell. Marvell, here's the action in Marvell. Marvell, you had a huge buyback. Also, there was some other news on Marvell. Oh, insider buying. Yeah, there were a few sweeps. There were a couple Gilligan ones. Where is it? You can see a bunch of action here. Where the big? Oh, here it is. October 75s. Yesterday. This is the buyback. $5 billion. Here's another one. October 31st, 80s. Big buying there. But again, you know, it's moved from yesterday, you know? It's moved. So maybe if it digests a little after this initial move, or comes in a little bit and they hit it again, maybe you get an opportunity. What do you mean, Tavo? There is the subtraction that gives liquidity related outcome. If you go on here, again, yeah, I don't know if the makeup and all, but if you go on here, there's several of them. Hey, global liquidity, global liquidity, global liquidity. What is this? I don't know what this is exactly. See, there's probably so many of them. I don't know which one. What is that, Stavro? That's the symbol? What is that? Like the one I look at is the M2 global liquidity. Here, I'll show you right now. Let me get this off here. What the hell is this? Global net liquidity? I don't know what that is. Oh shit, I don't have it on here. But it's M2 with it leads by a couple months. See how it leads by a couple months? But you know what I've realized? I don't know what setting I had. This has October. I don't know. The months are a little off here. Anyway. Again, this is not my expertise. Just being honest with you, you know? I'm not too familiar. TTD, somebody mentioned. That's a bounce candidate, right? Good bounce here. We haven't seen. I think we saw some longer term flow in it. TTD. What, type all these letters? Well, that'll take me 2 days. Let me see if I can copy and paste. Hold on. Oh, let's see what we got here. How come I can't pull it up? Now let me pull it up. But is that, what is that? Maybe the Fed balance sheet that is, or something? That could be the Fed balance sheet, right? Oh, reverse repo. Yeah. Yeah, I don't know much about that stuff. You know, only when I'm told. It is? Yeah, how's that? WT, let me try to pull it up. WTEGEN? The hell? Reggie 3 futures? That can't be it. I know, look at all those letters. You kidding me? I can't type all that in there. Oh, here, this. Yeah, I don't know what this is. WTREGEN. What is this, though? What is this, guys? Liabilities, deposits. Yeah, I don't, I'm not familiar. I don't follow these things. Like, what does this tell us? I don't know what the hell this is telling us. I'm just being honest. I don't follow this. The one person I follow for liquidity is Cross Border Capital. Howell. You right, Patrick? So he's like kind of my go-to source on liquidity. But again, it's not a big factor in what I do. It just, when it lines up, when it lines up with kind of what I'm seeing, it's just more like, here's an example, guys. When we were seeing our indicators light up bullish into the correction lows, right? And then you have this shot out of a cannon while the market is still having trouble. It just gives you a shove to lean bullish, right? It's confirmation to kind of what you're seeing already. And what we've been seeing is kind of liquidity still remaining robust while positioning is still not there yet. Like, let me show you guys a few things here, just so you understand what I'm getting at. This is updated hedge fund exposure in equities. Slightly net short. Okay, so they're not even net long equities yet. Here is, nope, that's not it. There was a more recent update for Goldman Prime. I gotta track it down maybe here. Here's a Goldman sentiment indicator, positioning indicator, negative 0.3. It's not even in positive territory yet. Here's the rolling 6-month return in the S&P when the indicator is down here. Right? Here was the indicator earlier in the year when we were supposed to be cautious. Okay? We're still here. Here is another look at the indicator. All right? This was coming into the year before the correction. This was the lows. We're here. Okay, doesn't mean we can't pull back. The difference is the pullback should be looked to as an opportunity, right? Doesn't mean we can't have a down week. It's just there's a higher probability that dips get bought, and there's not as much selling. funding spreads, they're buying. They're likely going to buy any dips. All right? So just positioning as a whole. Oh, where's the, there's one chart on here. Hold on. Where is it? It's not over here. I think it's been, hold on. Here is hedge funds. Last week, they actually did a little bit of buying, hedge funds. It's so funny. And we actually have a little bit of a sell-off this week. But they did a little bit of buying. But net, nothing. Where's the net? All right. Here's the S&P 500 futures, Sharpies, still on the long side. Hedge funds adding shorts. Look at it. Trying to look for oh, here's the chart. All right. Again, this is the market as a whole, right? The risk is that these guys, if the market comes in enough, okay, especially if there's like a catalyst and you get some decent selling, systematic funds will take down their risk. And that's going to add fuel to the fire. So you'll get some decent short-term selling momentum. Okay, what you won't get that's different from earlier in the year, the discretionary buying is just not there yet. Right? We were here earlier in the year before the correction, and we're still slightly net short. So any selling, they're likely going to look as an opportunity to buy because they haven't bought. A lot of the money that's on the sidelines has been waiting for a pullback. You know, so and that's kind of where we've been now for a while. AAII came out the last 2 weeks. That finally flipped bullish. You finally have more bulls than bears. Look, prior to that, 28% bulls halfway through September. You know? So, again, market as a whole, you do have pockets of heat that can certainly go into consolidation, can certainly retrace. You know? Honestly, I don't have a dog in that fight. I don't, you know what I mean? It's kind of last on my list to what I'm trying to pay attention to here. What I'm looking for in this market is where, if there is selling in places, where's the money looking to rotate into? Right? If they're selling the hot stuff, they're more likely to move the money elsewhere. They don't own much of anything else. So, but again, that's a market as a whole. And my opinion, the indexes are tough right now. There's a lot of tough money out there. Right? I think that's the big difference. I know I've said it a couple of times, but a month or two ago, you had opportunities everywhere. Right? Anywhere that saw buying was an opportunity. Here, it's different. You know, here it's a different environment. I think we need to be more selective. You know, but we want to still be willing to risk some money if there are setups we like. We just want to be patient and wait for decent risk-reward setups. That's all. You know, but as far as what we've been seeing today, and I ended on this, this is nothing. This, in my opinion, this is rotation more than even selling. You know, you can't tell me that risk is coming out of the market, or this is a sell-off where Irene goes up after being parabolic. You know, even the hot stuff can't even sell. Some of the hot stuff. But and again, we all have different preferences. You know, if you there were some energy names that caught some buying. If you're interested in that sort of thing, you know, I'm not crazy about energy, but what the hell do I know? You know, what the hell do I know? I mean, what you want my opinion? Any aggressive buying, new aggressive buying that shows up into something you like at a decent spot, you should fire. All right? Maybe you want to put less risk on. Maybe you want to size down. Maybe you don't want to have as many positions on. That all makes sense to me now, here, no doubt. But I think any new buying that shows up at decent spots and you like it is worth taking a look at still. Yeah, for sure. I know. I saw it there. There was some sweeper activity again today. Insanity. But you know, the momentum's that strong. You know, of course. You know, I would like, honestly, I would like something like this. You know, I told you I was looking like even in prior runs like this. We haven't really even had one like nothing major either. You get like even these things here. Look, you know, after a strong rally like this, I was talking about. This would be ideal. Something like this. Oh, I think that would set up a trampoline. Crazy. You know, but look at like this stretch, and you know, this is kind of what, right? I mean, COVID, you had crazy liquidity, you had, you know, a pretty not as drastic, but a similar washout kind of to liberation sentiment wise. You know, we haven't had something like this yet. We've had little this 1-2 day pullbacks. You know, we haven't even had this yet. Anything like this. This would be ideal, but I don't know if we're going to get that until we reel in more longs. You know? But who knows? Yeah, maybe you get a catalyst. Maybe you get news. This crazy world, you never know. But regardless, like I said, in a more selective fashion, I think we still try to look for opportunities. But I'd be careful chasing, even if these things are going higher. Me personally, I'd be careful chasing. I'm totally fine with stocks that are up huge going up more without me. I mean, I'm in this game too long for that shit to bother me. So I think that's kind of how we approach things. Okay. And then again, we thought maybe it would be around this time of year. Maybe it's the end of the year. We start to see positioning full up a bit more. Right? We start to see some of these warning signals build up. You know, that's a different story. But that's a different story. You know, even if there's a little more upside left in the market, we want to try to be in a more elevated cash position and not be willing to put on too much risk. But I don't think we're there yet. You know, I don't think we're there yet. Another thing, like I kind of been paying attention to, is kind of the VVIX and the setup there. Every time we get a little divergence on daily time frames, you get kind of what we got here. So right here, you had a little bit of a divergence building up that we were talking about. VVIX going higher while equities were still going higher, both VIX and VVIX. Okay. What happens? A day or two later, you get a rinse and it kind of resolves. And, like we were saying, I think that's kind of what we're going to have to deal with correlation so low. Until we get a healthy pop in correlation that's dealing with these VIX pops and divergences is not going to go away. We're going to have to deal with it. With this down here. It'd be nice to get something like this. This is what like Sahil and I are talking about. You get these kind of like nice, healthy little pops here. Nothing too drastic. Because then the unwind of this, you see like the unwind? That's a good couple weeks of healthy participation and decent tailwind. Now you got to deal with these little intermediate pops. So again, that's why I think we just be a little more selective and conservative while we deal with this stuff. Yep, my pleasure, Mr. Andrew. Everybody, enjoy the rest of your Thursday. We're talking about today. I can't believe this week's over already. I don't understand it. But tomorrow's Friday. Tomorrow we got the PCE tomorrow. Yeah, if it comes in a little bit hotter, you might get a continuation of the sell. And we also got end of the month. You got pension fund rebalance. They're tilted to the sell side. So maybe there's some chop into a little bit of selling over the next week. But again, to keep it simple, look for aggressive buying and new setups. And I think it solves a lot of the problem. Yep. Everybody, enjoy the rest of your night, guys. Those of you not in the Steam Room, have a great rest of the weekend. And I'll see you Steam Room members mañana. Later, everybody.